So let me show you how you can make trades in the different order types. So let's say you want to long BTC, so buy BTC at 32,820. And you should also have a stop loss closing your trade if this trade isn't working out. So let's do it here. This is just a random trade. So buy 32,800 and close the position if it's going below 32,420. So let's go to an actual exchange and show how you can do this trade. So this is Bitmex, just an example of exchange. This is the order book. So at the current time, people are trying to buy at this price, so it's moving quite fast here, and sell at this price. So this is the bid, and this is the ask. So these are moving quite fast, but it's resting orders in the book. They are limit orders. So let me show you an example of a limit order. So if I want to buy at 32,800, I can just place a limit order here. Let's just do this. There. Now I have a resting buy order to buy $500 worth of BTC at this price. I'm not getting filled yet. My order is resting in the books, the order book, waiting to get filled. So if price is going down here, this order will be filled as a maker order. It's making liquidity. And I will also want a stop loss for this trade, meaning that if price is going below a certain point, and I want to just close my position, reduce the loss, stop loss. Yeah. So let's do this by a stop market order. So if this condition is met, price is going to 32,420. I will make a sell stop. It's basically a stop market there. So if I'm getting filled first, but it is not reversing and I'm just getting stopped, this will force close my position here. It will trigger a market sell. And a market sell is not resting in the books. It's just an instant order. Let me show you an example. So if I'm doing a market order, if I were to do a market sell here, I will get filled at the best price possible in the order book at the time I do the order. As long as the order book has enough liquidity, so enough resting orders to fill my orders, I will get filled at the top here. If I'm doing a very big order, like 10 million sell or something, I could actually create quite a wick down here, because if I'm doing a market order, very big one, it first has to fill the top order, then the next, then the next, then the next, then the next. And my market order is not filled until my order is, it will fill my entire order, but it can go quite a distance down into the order book to actually fill my order if my order is very big. So that's how fat fingers can happen. As an example, if I'm doing a very big order here, I can actually expect to clear the order book, it's called, maybe $200 or something down into the order book before my order is completely filled. So that's a market order. It will get filled based on the order book. So if I'm doing a market order right here, I can just do it to show. I will get filled pretty much here. The current price, let's see, it's moving quite fast now, but sell. So I got filled here. Now I have a position up here, a small short. I can actually let this one run, I guess. Just the stop loss above here. So if price is going above I'm getting filled at 33,900. So if price is going above 33,900, close this short. That will be a buy to close a short. So it will be a buy stop. Buy. I can also show another example by limit orders and market orders. So if now I had a resting order down here, it will wait to get filled. If this one is getting filled, it will open a long. In this example, it will actually close my short. But yeah. But so this was a resting order below current price for a buy. If I'm doing a buy order above current price, this will actually act like a market order, because a resting buy order above, so it will not rest. So if I do a limit buy order above here, it will get instantly filled. So it will actually act as a market order. And that's important when we look at stop limits, because that's the order stop order type. So I could replace this one. I guess I can just do it here by a stop limit. So if price is going to 32,420, do a limit order, limit sell. So you shouldn't do a stop limit stop loss order at the same price as the trigger. You'll want it a little bit lower, because at this point it's not market smashing out of the position. It's actually setting a new sell order. So you want to do this a little bit below the trigger. I will show an example of why. So let's do it at 2,350. That's still quite close, by the way. So, but now this when we are going to 32,420, if we are going there, this will set a limit sell below current price. So it will still act as a market order. But if price is going lower than this, it will not actually fill unless we come up again. So the problem with setting a stop limit with the trigger price and the limit price at the same area here is that if Bitcoin is really dumping and then never bounce up again to this price, your order can actually get skipped. If you just go straight through and never, then you have to trigger the order, but then it's actually too late already. If it's a really intense dump, it can actually just dump more and never come back to the order that is now resting as a sell here. So the order basically got skipped because the distance between the trigger and the actual new order made was too big. Now, this test order kind of worked out. Let me actually just close this now. And I can actually just move my stop loss into profit. And yeah, it was a profitable trade. Just a test order, but it kind of worked out. I can actually take profits in this trade. Let's do a profit target randomly. So limit. Since this is a short, I'll take profits on this trade. Then it's actually a buy. Let me show you that. Let's do it at 33. So yeah, you can do this. If price is going down here, I want to close $200 of my short. Then it will need to be a buy order. And in the exchanges having this feature, we want to do a reduced only order. So let's do a reduced only order of $200 there. The reason for you to do a reduced only order is that if you just place a buy order here and they first come up and close your position with the stop loss, then this order will still be here. And you can buy here without actually having a stop loss and you can get wrecked. So that's why it's important to do a reduced only order on profit targets. This way, if this position is closed, it will also remove the profit target because it's a reduce only order. If this is stopped first, it cannot come down here and make a $200 long. That will not work because this order can only reduce the position size. So that's a smart thing to do. So what did we learn? A market order will just fill at the best possible price based on the order book. A stop market will wait for price to reach your set stop price, and then do a market order to close the position. You should do close on trigger if you are using Bitmex, because that will be the same as reduce only. It will only reduce a position. You can use a stop limit. It will wait for price to go to, if you go to this price, it will trigger a sell order or a buy order based on which direction you are in. So it will basically trigger a limit order when price is going there. A limit order will just stay in the book, and if people are market smashing into the limit order, it will get filled. So yeah, I recommend you enter a trade using a limit order because you want to have a plan for the entry. Oh, are they just stopping me out on my test order? It's actually a stop loss in profit, so I will not lose money on it. So you should limit in. Then you should have a market stop is my recommendation. And your profit targets should also be limit orders with reduce only, so they cannot make a new position if they first close the position and then come back into it. So these are my recommendations. Basically, all exchanges work this way with the order book like this. So limit orders, market orders, stop loss. Just learn the basics first before you trade. And in the next video, we'll be talking about your position sizing and such. So stay tuned.